After slow growth of 3.6% last year, Malaysia this year really has been recovering quite well. And I think beyond the headline numbers here, first half of the year growth accelerated to 5.1%. Beyond that, I think it's really the breadth of economic recovery we're seeing in Malaysia. In terms of the semiconductor story, in terms of the resilience in private consumption. So it's actually on fire on all fronts.
So let's go straight into how the Malaysian Ringgit's doing. And again, as you mentioned, night and day if you compare it to 6 months ago, from levels not seen since the Asian financial crisis. Now, undoubtedly, even Asia's possibly best performer year to date. Do you think this still has legs? And this is really a function of both of the Fed actually coming down and giving and the Bank Negara of Malaysia just saying, hey, we can wait for them to come to us rather than do anything at the moment. So we're just going to sit tight and let the ringgit flex continuously.
I think there's actually reasons from both sides here. I mean, the Fed, the weakening of the dollar is definitely one reason, but I mean, it's the reason for a lot of the Asian currencies gain here. I think for ringgit, really, we're seeing quite a lot of the more persuasion from Bank Negara, from Malaysia's government to coordinate with GLCs, GLICs. And the other thing I think is really because of the promising structural reforms here. We're seeing, a lot of the good momentum in Malaysia. So that's why it very much attracts the attention, the investment, especially for portfolio investors into Malaysia in recent months.
So let's talk about this one relationship that we see in a lot of economies. A stronger currency usually blunts exports growth, and this is something that is seen in Japan. We see it out in Thailand as they complain about the strong baht. It seems to not be the case, though, and you see that correlation actually kind of breaking down because Malaysian exports, despite that, has continued to show strong growth despite the ringgit, as you mentioned, flexing. Do you think that relationship isn't as tight as it used to be, especially in Malaysia's case?
Well, I think for Malaysia, it boils down to what kind of goods Malaysia exports. Really boils down to the composition of exports in Malaysia. Actually, Malaysia is a very well-diversified economy. We're talking about semiconductors. And I mean, if we look at the tech upcycle this time, Malaysia is still very much at the nascent stage of recovery here. And, a lot of the chips that produces, although still relatively, labor-intensive and relatively lower end of the manufacturing, it's still in great need by the global demand. And then the other thing is Malaysia is also a commodity exporter here, so do not forget. So I think it's really that diversification gives Malaysia an advantage over its regional peers.
Right.
Yun, why has Malaysia been able to be the outperformer in the region with regards to attracting FDI, particularly from China? And does the recent stimulus from Beijing make a difference?
Well, I mean, actually, right before the stimulus happened, we've seen this consistent path of FDI relocation to ASEAN. But I mean, within ASEAN, we're really talking to outperformers here. From a perspective of FDI diversion, one is Malaysia, the other is Vietnam here. I mean, Malaysia really, I think, as I mentioned, it's because of its well-diversified economy. The semiconductor industry here, we're seeing there's still a lot of momentum. There's still consistent FDI inflows into Penang, which is the powerhouse for Malaysia semiconductor. And then now we're also looking at a lot of the FDI coming into the data center part. For Chinese investment, I think it's quite interesting. When we look at the particular sector, actually a lot of it comes to the green transition, the green energy sector. So it's very much well diversified.